This is the current federal tax developments for the week of December the 16th, 2024. Current federal tax developments are brought to you by Kaplan Financial Education and by your state society of CPAs. I'm Ed Zollers, and we're coming to you again this week from Phoenix. And this week, we're going to take a look at a few things that happened. We will first tidy up a little detail that the president did sign the two tax bills we discussed last week that the Congress passed. Again, neither one is earth-shattering in terms of what it does. One is way more significant than the other. But again, neither bill will affect most taxpayers. It'll affect some, in one case, very significantly, potentially. But for most of our clients, probably not going to be a major bill we're going to be looking at. We do have an update on the Texas Top Cop Shop case. Department of Justice has now officially asked for a stay of the injunction issued by the U.S. District Court in Texas, waiting for the ruling on the appeal. Now, we'll talk about why this is likely a formality for right now, but it's a process to allow the Department of Justice, I suspect, to get an appeal more quickly before the Fifth Circuit on the simple issue of pulling the nationwide nature of this injunction. So we want to keep an eye on this part of it. And finally, the IRS this week announced they're expanding the business tax account access and services that can be accessed via that account. So we'll talk a bit about what all that means for us. Let's talk first about the bills that were signed into law. We actually got some law this year. The two bills in question are the Federal Disaster Tax Relief Act of 2023, which interestingly got finally passed in 24, but, hey, what the heck. And then the VSO Equal Tax Treatment Act, and that one was also done on 12/12 of 24. Both bills were passed in the Senate by voice vote on December 4th after having passed the House earlier in the year. The president's signature was expected. Nobody believed he had any reason to object to either of these bills, but this officially makes it the case now. We now do have these bills in effect, and these bills will take effect now upon the president's signature. So we do have an official enactment date of December 12th for these bills. Now, the Federal Disaster Tax Relief Act mainly it opens up exclusion of certain relief received by wildfire victims in federal declared disaster areas, opens up some relief for payments received by individuals impacted by the train derailment in East Palestine, Ohio, and also broadens out some guidance for allowing more deductions under 165H for certain disasters that have taken place. Specifically, that one seems to be more aimed at the hurricanes areas that we've had them. So all of those went into law. Right. Now, the passage of the larger bill, really HR 5863. Okay, the VSO Act should describe that, I guess, briefly. That one just expands the definition of a veteran service organization, effectively allows it to have only 75% of its members be essentially wartime veterans, as opposed to 90% that the old law allowed. It has a very, very minor impact. As I mentioned last week, it is scored as having a total cost over 10 years of $1 million, which, while I'd take a $1 million check, I'd also note that that's very, very minor if you compare that to the federal budget as a whole. In fact, even most state budgets would have trouble getting too worked up over that number. Over 10 years, $100,000 a year is not likely going to bankrupt any state. Even the states with the least population, let's take a Wyoming, is probably not going to be bankrupted by a $100,000 tax provision. So, yeah, as I said, it was a very, very specific one. But the larger bill, which had been included in basically the Federal Disaster Tax Relief Act, had been in the bill that the House had passed back in January. And this seems to be a tacit concession, that the larger bill is not going to be acted upon before this Senate adjourns for the final time. So if you're still out there hoping that somehow we're going to get that bill passed and have everything that was in that bill come into effect, retroactive, which would be things like the research, being able to deduct research expenses immediately, being able to get full bonus depreciation, get the more liberal computation of 163 GA interest we had before we end up having to also count in basically depreciation, depletion, and amortization. in computing our income for the adjusted taxable income limitation on that. Yeah, we're probably not getting any of that. It's going to go into next year. It will probably get rolled into whatever happens with the TCJ extension and however the Congress decides to move forward on that, which currently, the most recent article I saw this week was essentially that House and Senate leadership for right now have agreed to disagree on how to proceed. So, yeah, we're going to hope they come up with a plan so we have a little bit of predictability for next year as to how they're going to move forward. In a perfect world, they would act on this immediately. And by the day the president came into office, he would have bills to sign and we would just be done, knew it going forward. That's wildly unlikely to happen because of the process that has to be used. The best is probably for a March enactment date. And that still requires a lot of things to come into perfect alignment to make that work. And there is currently discussion, at least in some quarters, of going for a non-tax bill first, for the first reconciliation bill, get that through in the early days, and then use essentially the entire rest of 2025 to handle the TCJ issues for extension, which probably is not what you want to hear. You probably would like to get on top of the TCJ stuff a little bit faster than that. But again, Congress does not move by what makes life easier for accountants. Congress moves by what makes life easier for Congress generally. So that's kind of where we're going. Next up, this is the defendant's motion to stay the preliminary injunction pending appeal in the case of Texas Top Cop Shop Inc. versus Garland, case number 4:24-CV00478. This is from the U.S. District Court of the Eastern District of Texas. And this notice, this basically motion, was filed on December the 11th. Now, this is a formal request made to the U.S. District Court to stay its injunction barring enforcement of the CTA pending the outcome of the appeal that's being made to the Fifth Circuit Court of Appeals. And you might think, well, that's going to get turned down. And yeah, I think everybody knows where this is going. But still, formally, they're doing this so that they have specifically asked for relief, and that opens up the possibility then of filing an appeal of this, where the question would be whether we should have the injunction stay in place until the Fifth Circuit hears the entire case, or whether we should have it, stayed, the injunction stayed pending the hearing of that case. Now, fundamentally, when you read this, it's got a lot more meat to it, shall we say, than just the notice of the Fifth Circuit that they're going to be appealing the case. It describes the reasons why it believes that it was improper to give the injunction, and goes on to also say, and this is probably the more interesting part we're going to get to, about a concern about having the nationwide. Now, fundamentally, it's going to come down and state the judge made the wrong decision. Now, as you might guess, these sorts of motions don't seem to usually be very persuasive to the judge that rendered the decision to begin with. You fouled this up. Unless they uncovered something very, very obvious that this judge had not considered. And even then, you may have a little fun convincing them. It doesn't matter. It's rare you're going to see a swap. The judge has already done a lot of consideration, has already outlined this. He outlined his position. My guess is, not likely that he's going to grant this stay. He could, but it kind of seems weird that you would grant the injunction to begin with if you're then going to turn right back around and grant the stay. That would be it. It did raise the issue regarding the national nature of this injunction. And I suspect that is probably what they are going after. Probably if they go before the Fifth Circuit, is a question of whether the injunction should have been a nationwide one, whether in fact it meets the required criteria. And so they've, of course, cited a lot of things in there, including Fifth Circuit cases, regarding the use of a nationwide injunction or an injunction that covers people, as the Department of Justice will say here, that covers individuals, they get an injunction who have already had their cases decided by another U.S. District Court and been denied this specific relief. Is it fair for this court then to step in and grant it overall? And we all know there is the looming question of what the 11th Circuit's going to do. And as I said, that could get kind of interesting if the 11th Circuit were to rule that essentially, no, this is all fine. They have pure, clear, right to enact this thing, which they could rule. And if they did that, then you've got the weird nature of a circuit court of appeal, which is a higher level court, having said it's all fine, but a U.S. district court overriding their ruling effectively by having issued a national injunction. So that may be part of what they also are thinking might be in play here in the next few weeks. So we'll see if that comes up. In any event, I certainly do expect that this injunction, this request will be denied. And I suspect it's meant to be denied quickly, to set up an emergency appeal to the Fifth Circuit and perhaps even the Supreme Court of the United States if the motion is denied, arguing at the very least that the injunction should not be nationwide. Now, the problem for us with this is this opens up the question that I basically mentioned before, which is because FinCEN has only said that they are going to follow this order during the time it is in effect, with no statement of will there be a relief period afterward. While I do expect there will be one, I can't count on that expectation. Taken literally and effectively, the way the law would seem to work is if this injunction were to be lifted before January 1st, January 1st, 2025 would again become the due date and all documents need to be filed. And that could be a real problem as we're getting here close to the time of the year, where people start going on holiday vacations, etc. The company hasn't filed. It may be very difficult to get all the information together and get the document filed by January 1st of 2025. So that also kind of causes issues that we don't know how quick this will move. So because of that, keep your eye on this. This is another development that happened. This one has not gotten nearly the press as the initial injunction across the country. But we just need to watch to see how fast any of this is moving. Is this going to make a big difference? And it's a concern we have. Finally, this week, probably one of the bigger things that happened, at least from a practical standpoint for you, is the IRS had an announcement on the 12th that the business tax account is now available for corporate designated officials and the income verification express service is open to designated official sole proprietors. This is an expansion of the IRS's business tax account. Now, as you may remember, previously it was a very, very limited. There wasn't a lot there, and you weren't a sole proprietor or you weren't a partner or somebody who got a K-1 from a partnership or a corporation, an S corporation, you really, really couldn't use even what was there for the business. Now we're going to expand it up a bit in a couple of ways. We're going to expand access to C corporations. So a C corporation now will be one that can use this. We're also going to expand it to designated officials. So this will be, not only will it be a business account, designated officials, to be totally honest, that was one of the things that was causing them trouble, the C Corps, because we could know, the C Corp is authorized now, they have an account, but who's authorized to act for them? So what will happen now is your C Corporation will set up a BTA account, and then it will have designated officials who effectively will be able to access that account. Right? So it'll be access information. And designated officials also have access in the case of an S Corporation. In addition to the shareholders with the K-1, we will have the ability for access to be opened up to the designated officials. We also have a few new features for the following transcripts. You'll have business transcripts for the tax return transcript, the tax account transcript, and the tax entity transcripts will be available through the business tax accounts for those entities that get into this program. And some of those transcripts will be made available in Spanish as well. So gives us a little more access there. Now, the key question is this designated official, right? We know the C Corporation, that's the business. But now we're going to go into this category called a designated official. And this person must be someone legally authorized to bind the corporation under law. That effectively means you need to be generally a corporate officer. And actually, there are specific officers that count. So they'll tell you who can get in here. And you must have been on the payroll for the most recent tax filing year, right? So you have to be somebody that was there, so if you're going to do it right this instant, presumably, and I believe we can get in there right now, you'd have to have gotten a W-2 from the entity for 2023. right? Until once we get the 24 W-2s in process, then that'll be the year. But currently, if somebody just came on in 2024, they weren't there in 23, and so they didn't get a W-2, they weren't an employee in 23, then you couldn't be a designated official yet at this point. Now, the titles that can qualify for designated official would include the president, the vice president, the chief executive officer, CEO, the chief financial officer, and the chief operating officer, as well as the secretary of the organization, the treasurer, and a limited liability company managing member. Now, that's interesting because it would appear to mean if somebody was solely a manager, they could not be a designated official. And if an LLC had, let's say it was the members, none of the members were managers. We just had a manager managed LLC that had its own professional managers that came in, which is not the norm, but can happen. It would appear that it would not have a way really to make use of what we have here because there wouldn't be a managing member. There'd just be a manager. If that was intentional by IRS, I'm not sure, Treasury, or if they just assume that that's so rare, who cares about it? Not really clear, but right now it would appear if you just have managers and the managers don't own an interest, so they're not members, then we may not be able to make use of this. Now, if you're a DO, once you're authorized to be a DO and access the business tax account for the entity, you can view and pay the corporation's tax balances, and they can make federal tax deposits via the business account. That sounds interesting. It would appear to be another way to make deposits. The only quirk here is you've got to obviously be an officer. To do that, you don't have to be an officer to do it via the more traditional realms of the FTPS and other structures. So we'll have to look a little closer at how this whole paying taxes on there works. And designated officials and sole proprietors can also use their business tax account of the entity to approve or reject a tax transcript authorization from a lender via the IRS Income Verification Express Service, IVES. That's when they're applying for a loan and the lender wants to verify reported income. So they're allowed to now, in essence, you can now online approve those with the IRS instead of having to get other approval methods. You may find, therefore, you might want a business tax account for no other reason than your lender is going to expect you to be able to online approve it to speed up the process of getting their verification request approved. So we may find that gets pushed. Now, what exactly can you look at through a business tax account? If you can find out immediately if the entity has any taxes due, right? The balance due will be on there. You also can have your payment history, including payments made through the BTA account itself, EFTPS, online payments, payroll processor payments. Now, that could be very useful, right, to make sure that your payroll service actually paid the taxes, wire transfers, checks or money orders, and if any payments were returned or refused. So in order to running down why there's a balance shown based on the payments, you can get the true payment history. And that's always really important. Now, what does the computer think you paid and when? And what do you think you paid and when? And then trying to figure out if there's a difference, why there's a difference in the two. If there's any authorization requests from a lender that's been submitted through IVES, you'll be able to see that on the BTA. You get transcripts for income, payroll, and excise tax returns. So again, very, very useful if the IRS has some sort of notice coming to you to try to straighten out what's been happening. I find it incredibly useful, right, to get the transcripts and have access to the payment history, and you can figure out and maybe straighten out a lot of situations that otherwise are more difficult to do if you're having to just handle it with the paper from the IRS. There will be digital copies right now, they say, of select IRS notices. So it doesn't mean every notice, you'll be able to make sure you've seen all the notices. Some of them may not be in here. In fact, pretty much sure. Since it says select, certainly as of the moment, not all of them are going to be there. What the IRS has as your business name and address, there are times those need to be, verified and corrected so you can see that. A tax compliance report or tax certificate for award use. If you need to confirm you're in tax compliance, you can get a certificate for that via this mechanism. and business entity transcripts with their business name, mailing address, and location address. Now, that's limited to sole proprietors in that particular case, because that's a special subscript, right? The business entity, as opposed to the taxpayer, who's going to be a different, the individual. It's a different structure. There's different issues there. Now, you can make electronic payments on the tax balance, or you can make a federal tax deposit via BTA. So as I said, this appears to be a separate way to pay taxes. It'll be electronic, so it would obviously hit the bank account, but I strongly suspect this will be just directly hitting the bank account. You'll give them, the correct account access information, your account number, routing number, etc. I suspect that will allow you to make them this way. That could be simpler for some taxpayers. You could set up a future payment or cancel a scheduled payment. Again, can be useful. You could schedule up your estimates apparently, and then if it turns out that it's changed, you could actually go back in and cancel that payment and presumably create a new one. You could approve or reject a tax transcript authorization from a lender, the IVES request. You're able to go in there and say, yes, fine, I know about that one. Oh, no, I have no idea why Bank B from Wisconsin, and I'm here in Arizona, why it's asking for it, so I'm going to turn that one down until they tell me. You could download transcripts and select IRS notices. Kind of useful. We can look at them, but we can download them. You can give account access to employees of the business, but here's a big one. This is still limited to sole proprietors. That's probably important because in many cases, you might have somebody handling all the tax information for the entity. That person may be a controller in the entity, but they're not a corporate officer. This would not allow them to give access to the BTA account to that individual. Now, clients need to be careful saying, well, that's okay. I'm going to let Mary, my controller, I'm just going to give Mary my account login information, and Mary can just do it and pretend Mary's me. Well, that's great, except remember, you're not going to really be able to say that I didn't do X. If it turns out that Mary, maybe you had a little more trust in Mary than you should have, phrase it that way. You might have a defense in the case of an employee who clearly wasn't the person authorized to act for the company. But I think it's going to be a lot more interesting if you're in there saying, oh, I gave somebody else my information. Well, then that seems like that's a security breach to begin with. So you might not get a lot of sympathy. So be aware of that. We're not going to be able to delegate this to, an employee, and you're not able to delegate this to the outside CPA, right? It's got to be a corporate officer will be the only ones that can get in and do this. So I'm sure, now the IRS swears eventually we're going to get access to it, third-party authorizations, we'll be able to get authorization to see this and access this as a third party. But as it is right now, we're probably going to need to bring the client in the office and have them actually technically do it if we want to see this stuff, or at least have somebody there who knows how to make it work, and can go get the right documents and send them to us so we can figure out what the heck's been going on. Now, who qualifies for an account? You qualify for an account if you're a sole proprietor has an employee identification number issued by the IRS. Now, note, that's a sole proprietor. As you're going to discover, if you're a discard entity that has its own EIN, you're not in here. We got a different problem. Okay? An individual partner, individual shareholder that has both a Social Security number, individual taxpayer identification number, and a Schedule K-1 on file for partners for 2012 to 23, for shareholders from 2006 to 23. So we can get access to that. Now, the next one on the IRS's list does not appear to be that different. It says individual partners and individual shareholders of limited liability companies reporting income on, and I think this is what this is for, is simply check the box. So in the first category there, we're talking about a true partnership, a true corporation. Now we're going to talk about an LLC under check the box as being treated as if they are a partnership or an S corporation. Then you can have that, access to BTA, and you got to have a Social Security number, or an ITIN number, and a K-1. So in essence, check the box doesn't matter. If I check the box And really, the taxpayer is an LLC pretending to be, a partnership or an S corporation. That's not going to cause me a problem. Okay. So far, so good. Or the president, vice president, CEO, CFO, COO, secretary, treasurer, LLC managing member of a corporation. Which, of course, LLC managing member of a corporation means check the box. You're a C corp on check the box. That's not going to be a problem for us either. Now, as you may guess, those last two, we have a problem, as I mentioned, with single member LLCs, because that's not really covered here, right? And the IRS, this comes directly from the fact sheet. Single member LLCs with an EIN that are reporting business income on a Schedule C Form 1040, profit or loss from business or sole proprietorship, can't currently access BTA. So, basically, single member LLCs can't do it. Now, that is a huge exclusion for a lot of Schedule Cs, unless you're in a state like California, where it's going to cost money if you're an LLC, additional to norm, where you may be more likely to say, I'm just going to take my chances. In a state like Arizona, there are a lot of people that just, form LLCs automatically for a sole proprietorship because, well, better safe than sorry is the theory on liability protection. We don't know how good or bad it is, but it seems like it can't hurt. Also, a tax preparer or representative, meaning a lot of you listening here, right, will not have access to a BTA, and in the future will use a tax pro to support their business taxpayers. But of course, currently we can't do that. That's going to come through the tax pro account. You cannot get BTA access as the outside CPA, outside EA. You cannot get that third-party access, right? Under the agency's Israel First Initiative, these businesses, as well as other entities, including tax exempts or government agencies and partnerships, will be able to access BTA in the future. So, yeah, we have a limited set of access for this. Okay. Now, to set up the BTA account, the business is going to need Social Security number or individual tax identification number, if that's what it's, so probably Schedule C type setup. Employer ID number found in the EIN confirmation verification letter or on a federal tax return. And one of the following federal tax documents, this will almost certainly be to verify a number as reported most recently. The Schedule C, profit or loss from business sole proprietorship. Form 1065, the return of partnership income. Form 1120, the U.S. corporation income tax return, or Form 1120-S, the U.S. income tax return for an S corporation. Right, that's what we need. And you'll have a Schedule K1 from the of a partnership or of an S corporation will be needed to do this. And the business or mailing address from the most recent IRS records will be part of that. That will allow the business to get a BTA account set up. Now, you're probably going to also need, for a corporation, you're going to need a designated official. So now we need a DO to get registered. And a DO should gather all required tax records and basically get everything you need for the BTA. Presumably, in most cases, we're going to be going for the BTA account, get it established online, and then immediately do a DO registration so that at a certain point, we're going to get somebody who can access that account. Because without somebody who can access a business account, doesn't seem terribly useful, right? So you want the corporation's EIN, federal tax return, 1120-1120-S, and mailing address to the most recent IRS records. You next sign the corporation's existing business tax account, right? That'll be there, right? You'll do that. And you register as a DO by requesting a PIN. The PIN's unique to the requesting user, cannot be transferred to another user, and is sent to the most recent business mailing address. The DO will get their PIN within 5 to 10 business days. It's not going to appear immediately. You've got to wait for it to be mailed out to the business's address. The reason for that is fairly obvious. That helps them assure that somebody is not just faking it online, right? No matter how much information they have, in theory, we're going to send it to the last address on file. So that provides a bit of protection for a taxpayer who's setting this up, right? Okay. All DOs must revalidate annually using BTA, and although not required, a corporation can help ensure continued business access to BTA by having multiple, in essence, DOs. So you can have more than one person who is eligible to access as a DO, and that will help you get it there. So again, this is the fact sheet from last week on the IRS website. They have a whole page. And usually the way I find fact sheets is I go to their website and just, I say to Google and just say IRS fact sheets. That takes me to the page. And obviously it's a fairly recent one. It'll be right up top. Otherwise, you got to dig down a little bit to find them. That's where you find information about the business tax accounts. Now, this has been the current federal tax developments for the week of December the 16th. Current federal tax developments, again, are brought to you by Kaplan Financial Education and by your state side of CPAs. My email address, edzollers@currentfederaltaxdevelopments.com. I may be able to answer some questions there. Also, I do take a look at the discussion groups on the Connect sites for the Arizona Society, New Jersey Society of CPAs, Idaho Society of CPAs, Minnesota Society of CPAs, and Illinois and Washington. So take a look there. So you have questions, you're a member of one of those state society of CPAs, you can then go there, and if you have a question, post there. Otherwise, as I say, it's been an interesting week. Now, again, we are between administrations. Keep that in mind. So the odds of us having something earth-shattering coming down in the next few weeks is probably pretty small. I'm going to guess we're going to be treading water for the most part until such time as new administration takes office and has enough time to get some people installed. So whether you're, if you think we're going to get a resolution to TCJA, the whole TCJA problem in the next few days, now we're not going to. If you expect something earth-shattering, now court cases obviously will continue. We'll still get court decisions coming down. But whether or not we're going to get anything, I do not expect any major regulation projects to come out. If they do come out, I expect them to be rescinded immediately by the incoming administration, at least temporarily paused. So, you kind of think there's no real point in coming out with something now. I think that's also the reason why we've had, kind of not necessarily real clear guidance from FinCEN about what they're going to do if there is, in fact, a reversal of the injunction, because, the administration, whoever's in the White House at that time, at least they're, whoever they've appointed to handle Treasury, will likely have a big influence on what happens and how quickly things happen. So in essence, there's a good chance that the people that are there today to be authorized to make that call, or the very top be authorized to make that call. Yeah, they're not likely to be there, if this drags on into next year, which I think, regardless of what we do about this injunction, the actual issue of whether the CTA is constitutional or not, I fully expect that to drag into next year. And essentially until such time as U.S. Supreme Court will pick up a case on it, I think we'll be sitting in uncertainty for a while there. So with that said, it's going to be a nice little boring set of time. It's probably not too bad for the end of the year. But it does mean that we're going to have a lot of uncertainty in 25. We have no clue when uncertainty gets cleared up. So with that, I will see you all next week here on Current Federal Tax Developments.